It's Omar. It is December 30th, 2017, and I wanted to make a quick video just about trading fundamentals. It's not going to be really in depth, but just things to think about when you're looking for stocks to trade and good catalysts and things of that nature. I briefly, really quickly, just wrote some things that you just want to think about when you're making trades. So one of the things that you should do is you should build your watch list the night before with support and resistance lines for potential entry and exits. It's best to trade stocks with a plan. So it's the best idea is to kind of have a game plan of what you want to trade and how do you do that. So what you should be doing is scanning for stocks. Usually people look for like the highest percentage gainers, stocks with a lot of volume and that are very volatile, to give you a sense of like what to trade. So for example, right, so this is a scan that I run every night. If you don't know how these scans that I use, if you want to learn how I have built them, I have a video, so you can follow me. My handle's watchotrade on YouTube, and I have this. So let me go back so to show you how I got here. So if you go to my page, you go to playlist, and you're gonna see this fundamental momentum trading fundamentals. And if you click this, I put like 12 videos here that kind of go into it. Now this video is an hour 40 minutes. You can watch this if you know nothing about trading. It gives you some good insight into like trading. And my strategy has changed a little bit since here. Like there's indicators here I don't use much anymore. I kind of cut everything down, but it's a good base of information to kind of put you on the right track. This second video is how I create the custom scanners and indicators using Thinkorswim. Now with Thinkorswim, guys, it's free. So if you live in America, I think you can get it in Canada too. You don't need to open an account with any funds to have Thinkorswim. I like it because it's really great for charting. And my setup, I have the 1 minute, 5 minute, I'm sorry, this should be the 15 minute, 15 minute. Oh, that's weird. I should have it. I use also the 15-minute time frame. So I'll click time frame, 2 days, 15 minute, and the daily. So over here you have the daily for a year, and this is the Fibonacci retracement. It's automated. I have another video here. If you want to learn how I use fibs, it's not going to be here. It's actually if you go to my December, if you go back to the playlist and you go to watch list videos for December, I have this these two videos. So the one is kind of how I use them, and the second one is like a follow-up to it, just kind of reviewing trades. I love Fibonacci. It's great because it's basically based off support and resistance lines, and you can get an idea of how trends work using Fibonacci. It's pretty remarkable how accurate they can be. Nothing's guaranteed, but they do work. All right, so you can a lot of content, a lot of information you can review. So with that said, let's go back to this. So you should build your watch list the night before using support and resistance lines for potential entries and exits. Now what I do is I'll usually run this scan, and you can run it using the nightly scan, or if you don't have Thinkorswim and you don't use this, you can go to Finviz. So you should have finviz.com as a favorite in your computer. And if you go to let's say, well, right here it gives you the most.
They'll head for the exits airport and get at.
So it'll give you let's see if I can get rid of this. It'll give you the biggest percentage changes here. But what you want is to focus on percentage changes with volume. And what you can do is you can go to screener. If you click on screener, what I usually do is like you can click screener. You can go to where it says all, right? And then once you go to all, I like to do current volume over 750,000 shares. Change from the open. I like to do, like a minimum of 3%. All right, and if you want to use your price, it depends on what price range you want to trade, want to search for. But I'll say under $30 just to do that. And then what it's going to do is it'll give you a bunch of tickers here. It gives me 46. And if you want, you can go to, once you can do that, you can go to charts. And you can go to candle. And then what you can do is you can kind of review the charts here to see what the stocks were doing. You know, if you don't, let me go back. If you want, you can go back to, I think, is overview. And then in overview, if you don't want to just look at those charts there, you can just click on volume, and it should filter the most volume from the to the least volume. You can kind of filter and look through stocks this way, and you can kind of get a sense of which were the biggest percentage gainers, which were the most active stocks. I like to look at stocks that a lot of times that are holding their highs, and or stocks that were beaten down, like really, you know, dropped a lot in percentage to kind of, you know, gauge the volatility. The biggest percentage gainer, now if I go back to change, was COS. COS was and I actually traded this yesterday. I traded COS and I traded Apple. And you know, and you can click on it. Now, you know, generally when you see a stock move, there's some sort of catalyst, right? So you should, and that's gonna lead me to it says if you decide to trade a stock that's on your watch list, make sure to review the chart history a minimum of a year to see what happens when the stock has moved in price. Did it continue to go higher or spiked and crash? Set support and resistance trend lines if necessary. Check the news. See if it was a contract awarded, good earnings, great PR. Is the stock in a sector that is currently hot? Like two great examples are blockchain and wheat stocks. Now, I couldn't find any news on why COS was running. I thought maybe it was like related to blockchain because everything is blockchain related. I couldn't find any news. So, you know, so I had no reason to know why it was, but it had a lot of volume. It was up crazy. So it was volatile and shares available. So it's important to understand that's called the float. So shares equals the float. That's also another thing here. Is look to see if the stock is considered a low float stock, meaning does the stock have 20 million or less shares available to trade. The lower the float, the faster it moves in price, which can lead to bigger profits very quickly. Lower float equals more horsepower. So think of it this way: the less shares that are available for stock to trade, the faster it has to trade between buyers and sellers, and that drives the price of the stock up quickly or down quickly. So it works both ways. And I don't know why this spike, maybe the chat room pumped it, I don't know, but it just started moving. And you can see between and the move started pretty much at like about 10:05. By 10:05 it was 162. By 10:27 the stock was up at a high of 287. So it you know, it just started ripping. Now what you want to do is when you see a stock gapping up to get a sense of where you should trade it. Now this is my Fibonacci. Let me remove this just for now, just for a second, just to show you. Actually, you know what? I should. That's all right. I wanted to, yeah, put up a bigger chart. So this is a big 1 minute chart here. I'll move that over so you can just see it nice and clear. Let me get rid of this, just so you can see. All right, so just so you can see so what I like to do is I like to see how high the stock is going to go up before the first pullback. And if you notice here, you know, it starts gapping up, and this is sort of the first pullback. So you see it gaps up here, second pullback. So, you know, I would put a trend line here, and you see now this is acting as resistance. And you can see in this you know, second here, it gapped up a little higher. Let me remove that. It's a little too high. It's important to get it right, or close to right. So you notice, you know, it's gapping up, and you got this little tap here. Now, what me personally, you know, this is like my strategy. Like if I see a stock up, now I couldn't short this. There were no shares available with Thinkorswim. But you know, if you're short bias, I like to see a stock gap up at its height, and then try to, you know, see, is it going to get past above it? And you notice here, look, it's holding this as resistance. You see, it can't break this, and this is what, the high 285. You see how it's kind of getting to about that 285 level, but it can't break it. When I see this, I'm shorting, risking this. And you could have took a short, and you could have got here for a wash. Now what you notice here is that it's gapping down, right? It's gapping down, but if you notice, right, so this is the low, it's forming, once it found its low here, it's starting to form higher lows here. And you see now it's forming this, so this is a support level, and this is forming its new support level. Now when you see this consolidation, okay, you're gonna notice now, let me move this, you're gonna notice that this is the high point, and now it's in this downward trend, right? So if you notice, you know, it's finding its support here, it's kind of trending down this way, and if you notice, it's consolidating. When you see this, you could start seeing the volume coming in. You can take a trade on it, and what your price target would be the high point. So this is the high of the day. This would be, at a minimum, you wanna see if it's gonna reach this, you know, 285 level. If you're taking a crack at it here, risking the low, which would at this point would have been 227, you know, so you know what your risk is. It's important to know what you're risking when you're getting in a trade. And sure enough, what's happening is, right, if people see what I see and they're shorting the stock here, and remember, it's a low float, so that means the rotation is going through quickly, and that's going to drive the price of the stock up and down fairly quickly. Now the thing that's sketchy about this, there's really no news driving the price of the stock. So, you know, you got to be real careful if you're making an entry on this. I mean, theoretically, the stock should have just crashed. Now, what you want to do too is, before you get into trade, is you want to review the stock history. So what I would do, here's the, you know, I'll change it here. I'm going to put the 1 year daily. And what I would see is, okay, what happened each time it ripped? And if you notice here, look at this stock opened at 230, hit a high of 273, hit a low of 225, closed at 242. You know, here it opened up at 241, hit a high of 276, a low of 241, closed at 248. So if you noticed, it does have, you know, it does have the ability to spike, but it never kind of holds up its highs, right? It kind of like gives a lot of it back. And if you look over the year, it continually does that, you know. So, you know, you can tell that, you know, the stock doesn't hold its highs. Now, this is the only trend that I can see of, which was back in January of 2017, where, you know, this stock each day kind of started to run, and this was the day where it had the big move from 240 to 270, but it got to 240 and it 241 and closed at 248. So you notice that it does have a history where, you know, that it did move for a couple of days, but eventually gives it all back. So you know what this is? This is a dog shit company that's gonna give it all back. You know, it's gonna give it all back. So this is probably gonna be a great short, you know, and it's probably gonna wash all the way and it's gonna get back down, because if you notice, each time it goes up, what does it do? Cracks, and it gives back big losses. So this stock is gonna go back to none. So if you can find shares to short, you're lucky enough to do that, you know, this may be a great short. Now, getting back to the trade and when I got in. So let me go back. Oops, 2 day 1 minute. So what I saw was, now this is VWAP, and this is the 13 EMA. And so think of it this way: VWAP stands for the volume weighted average price. When a stock is above it, you know, you're betting that the stock's going to be bullish, and when the stock is below it, you're betting that the stock is going to be bearish. Okay, that's theoretically what VWAP is. And what I saw when I took the trade was, when I saw the stock gap up, right? I see the stock gapping up here, and I see the volume starting to come in, all right? And I see, you know, it's riding this 13 EMA, and you see right here, it kind of pulls back, and you see how it reclaims VWAP. So VWAP at this point acts as support. And if you notice, each way it's coming up. So you see, every time it pulls back, theoretically, this is a new support level. So here's the new, whoops, sorry about that, guys. So here's the new support level right here. Oh, that's why. Sorry about that. Let's do that. So here's the new support level right here, and it's riding this trend. Here's another new support level here. And you see, each time it pulls back, that's higher lows, right? It's higher lows. And look what happens here, guys. It gaps up, and this was the previous. Look at this. This previous support now plays resistance. It doesn't break this, right? That's why it's so important to understand support and resistance. It pulls back and it reclaims VWAP. when I saw it reclaim VWAP here and it started getting a little bit of volume, and I see that it wasn't, I took a trade on. This is a trade that I kind of do often. When I see stocks bounce off VWAP, and I'm thinking, you know, in my mind, I'm thinking, all right, these are shorts covering here. That's what's causing the artificial spike, because they see that the stock found its clear support level and it's consolidating, it's not dropping in price. It gaps up, it pulls back, and now it bounces off VWAP, which is saying that it's in a bullish trend. And now all those short sellers are like, really, like, you know what, I'm really gonna cover, because they probably saw this stock, you know, gap up here, right? And this is the support level now that's acting as resistance, right? They're saying, hey, you know what, I'm taking a short here, it's not breaking this, and it gaps and it bounces off this, but they see that the volume's coming in, and that's what caused the artificial spike. So when I saw this, I took a trade here, and I got executed right into this candle here, which I think I got executed. I saw it right in here where I waited to see the next candle. I started to see some more volume coming in, so it made me feel more comfortable making the trade. I got executed at 265, and you know, I just took this up, and it went all the way up. You know, I was looking to get out at my goal was $3. You know, and you know, I was looking at these resistance levels as potential, you know, pullbacks. But you see how it rolled the 13 EMA. I felt very comfortable staying in the trade. I also like to use trend lines, and I use my fibs too. My Fibonacci, you know, I took it off. But what I like to do is I'll look. What I do is once I'm in a trade, I just watch the stock follow a trend. So I had my trend line here. I also have my Fibonacci retracement. So here, let me pull it up. And you know what made me feel more comfortable too was this. Let me zoom out here. Was that, you know, this? Well, this was the high day at this point, but when it retraced 23%. Now, you know, it got higher at each point, but it was still in a bullish trend according to Fibonacci. That's basically in a nutshell. But you don't really need Fibonacci, you know. But I like it, you know. To each their own, and you know. And then it spiked up. So in this candle, in the strength, I like to sell into strength. It got up in this candle. I couldn't believe it. It got it to 309, and then it came back down. And when it came down, I actually should have sold, and I didn't. I wanted to see it kind of what was gonna do in the next candle, and I saw more volume coming in because I saw there was so much volume here. I said maybe there's gonna be more buyers coming in over that $3 level, and I held, and into here I got executed at like 320. I think it was like 325 or 323, somewhere in that range. I sold my shares, and I took a 2,000 share position. So you know, it was a nice trade. You know, it was a very, very nice trade. You know, and then it hit its high. Now, what you can do is, you know, if you have shares to short, I'm short bias, and if you notice here at this point, this is the high day, and you notice this is. Oops, let's do this. So this is the high day right here, and I'm big into, like, when I see the high day and I see the next candle gap up, but it's not breaking that, I like to take short positions. And right here I would have taken a short, risking this had I it had shares to short, because you know, when you get this kind of volatility, you're gonna get a wash. And it kind of washed back down. And if you notice here, look at how it just bounced off those previous resistance levels, which now act as support. And if you notice, look what happens. It comes all the way back down to VWAP, reclaims VWAP, and you know, and then again, you know, short sellers who shorted, like, probably saw what I saw. They saw here that each time, you see how it's forming lower highs. It's forming lower highs. They saw this. They probably short into these pops, risking off the high. They saw it come down, and they see it come up, but they see that the stock is not breaking above that high. You know, they're shorting more and more. And they see it come down, and guess what? It's not breaking below VWAP. They're like, fuck, you know, this is not ready to give up. So guess what happens? They cover. And that's what causing the artificial spike. And that's why you got another artificial spike here, you know? And then the same thing again. They see this pop here. They see the next stock. They see this kind of go down. These are gravestone dojis, or telling you that it's a trend reversal taking place. And sure enough, came back down to VWAP, but it couldn't break below VWAP. So guess what's happening? More short sellers are covering their shares, which causes another artificial spike. You know, and buyers see this and they try to just dip buy this quickly for a quick profit. You know, I was done after I made that trade. I was done. I thought about it, but I didn't jump back in. And here, this is where the impending doom happens. So, it actually breaks to a new high, but doesn't seem to hold it. You see right here, it forms a lower high again. And you see here, more weakness right here. So right here is like the kiss of death. Did short sellers see this? And boom, for those who could find shares to short, that's it. They are, shorting it because they're going to risk off this. They see all this resistance above it. And, this thing, and look at this. I'm going to remove all this to show you how amazing Fibonacci is. And this is accurate because this is the high of day. Fibonacci works, look what happened. We traced 61.8% pre-market, and then it bounced. And I like to make trades off the bounces. Yeah, it's phenomenal. Fibonacci's fantastic. It's not always this accurate, but it literally was to the freaking penny. The low was 223. Fibonacci is 223, and then short sellers covered. The market respects Fibonacci, not always, but most of the time. So, that's cost, and I'm just trying to give you some insight into why the stock, why it was spiking and selling off. All right. Now, to get back to what I was talking about, so what you do is when you're looking for stocks, again, now this stock, it would be on my watch list for Monday, Tuesday, because it's volatile. A lot of short sellers are shorting it. It's a low float. And what I would be looking to see is because it's bullshit. If I was able to find shares to short, I would be looking to short this Monday. But what I would be doing is saying, hey, right now, this 220 mark, this 221 mark is the clear support level. So if it breaks below that, this would be a great short, and you would be looking to see a key support level. Maybe you can make a quick dip buy, but that's what I would be looking. I would be looking at all these stocks to see what's moving. Like, so for example, this stock here, PRED, has no volume. So even though it's up 61% and it's a low float, you can kind of look at it because it could be the beginning of a trend. So what I would do is I would click on PRED. I don't know anything about the company. I can go to analyze. Oops. It doesn't show me anything there. So, let's go profit. So what I do then is use FinViz and Yahoo Finance to kind of see the news, see how many insiders are invested in the stock. The more people invested, the better the probability the stock goes higher in price. And the percentage of the stock is short. Short meaning the higher the percentage of the stock is short, the more people are betting against the company for the price to go down. It also means that if the price of the stock goes higher, those people who are short will have to buy their shares back, causing an artificial spike in the price of the stock for you to take advantage of. So, all right, just to look at that company, just PRED, and I'm just winging this, guys. I'm not really. So let's look at PRED. I don't know what it is. So I'm in Yahoo Finance, and Yahoo Finance is a predictive technology group, PRED. So I don't know anything about this company. Announces insurance of U.S. patent for method for treating endometriosis. So it looks like this is, let's see, profile. It's an over-the-counter stock, and you can see it's some bullshit company. It doesn't even say, but predictive technology. It looks like it's pharmaceutical company or something like that, biotech or something like that. And if you want, you can go to the company. You see, you don't really have much about the company, but this is what's causing the artificial spike. Yeah, and that's what it looks like, So you can kind of read and see about the company. And if this stock was in a sector that was moving, biotechs are moving, then maybe it's a potential stock that you want to invest in. What you want to do is you want to look at that chart history. So what you do is you go to the stock and you say, okay, let's see if this stock ever moved before. Right now, over the last, and this is the 1 year here. I'll put on the bigger chart so you can see. Let's pull up the 1 year so we can see. All right, so we can see, hey, this stock had this crazy move. This stock was 18 cents. Wow. So this stock was 18 cents in June. Imagine if you had shares here, and this thing went from 18 cents all the way up to 128. you know, and then kind of been, you know, pulled back, but it's kind of been holding. Now, what I would want to do is see, okay, let me look further back in time. So I'll go to time frame, and I'll do, you know, let's do 5 years. And to see when was the last time. So, you know, this stock hit a high. If we look at this, right, this stock went from 97 cents to 216, and it closed at 97, right? So it didn't I'm sorry, why is it saying 97 cents? It went up to 216, but it's at 150. Now there's no volume here, you know, and that's a, you know, it's a shitty company. I'm just trying to give you some insight on what you do. You do the research, you look at the stock, and you say to yourself, let me zoom out here. Say, okay, this stock looks like, wow, the last time it moved, it did move. It had multiple days. This stock went to as high as $11. This was back in 2015, you know, and look at this. It had no volume here each day, and on this last day, but look, it has no volume. So I wouldn't be comfortable trading this stock, all right, you know. But you know, if you wanted to, you could take 100 shares and swing it and see if it's worth anything. But you want to know what the high and low of that stock is before you do that. So what you want to do is you want to risk off, you know, the high and low, the previous high and low, know what your support and resistance is, so you can get a sense of where you would want to place that trade, you know. And right now, you know, the low here is 97 cents. So I would be, me personally, if I was going to swing this, now I wouldn't even trade this. This is garbage. But let's say I was. I'm just giving you a hypothetical. You know, it seems to be the low. I would put an alert to see, you know, I would put an alert at that 92 cent level to see, oops, you know, at or above, you know, if holds 92 cent, maybe a dip buy swing, you know, I don't know. And you know, you can do that. Now also, if you can see, it gaps up, pulls back. This is theoretically right here, this line here, this, oops, let me get rid of this. This low here of 131, this is clearly the support level on the daily, you know. So you know, you can see, hey, you know, is it gonna hold that 131? You can also put, you know, an alert here to see if it holds that 131 level. Hey, maybe it, you know, it runs again. You know, that's what you want to see. You want to test it to see if it's going to hold. And but this was a bad example, and I'm winging this. Now let's move on. Next, XGMD. This is a stock that had 8 million shares traded. It's a you know, it's a high float. It's not a low float stock, but SGMD, you know, it moved 51%. Now SGMD is what is this? Subsector restaurants and companies here, paper derived from non-wood. Producer, So let's see. SGMD. Let me get out of this. Sorry guys. SGMD. So this is a consumer and paper product. Now, what I like to do is, you know, you always want to see the news, because maybe there's some news that caused the price of the stock to go up. Outlines corporate changes to facilitate becoming one of the world's largest publicly traded cannabis supply companies. That's why the stock is starting to move. We're in the wheat sector. The wheat sector is hot right now. So just that stupid press release, right, of this bullshit company made the stock go higher. Now, what I would be doing is, all right, let me look at the stock over the past year. Let's see if it has a habit of moving on news. Now, if you look at this stock was at 7 cents. All right, you know, back December 11th of this year, it has been gapping up. It's at 28 cents. Now, what you want to see is the next resistance level. So what I would do is, look at this. This stock has in the past, you know, gapped up. You know, it hit a high of 35 cents here. It's got as high as 39 cents. All right, 28 cents. So what I would be doing is, you know, I would be putting clear, you know, support and resistance levels. So if I thought about taking a trade on it, I know what my clear support is. Because look, this stock back. Now it's very, this has no volume, so this is kind of not a, this is a horrible example. But my point is that here on this day here, it traded 700,000 shares, and it went from 27 cents to 71 cents. So my point is that it's in a hot sector, and it has spiked before. So the potential for it to spike is there again, you know, and it's obviously moving, and the volume is coming in. So you know, I put my key, you know, support lines here, I mean resistance lines here, and you know, you can maybe potentially make a trade off that, you know, if it holds. Now this is a shitty stock, you know, it's a terrible example, but I'm just trying to give you an idea of how you look for stocks in a sector and all that kind of stuff. Now CAN is a stock that, it's a wheat stock, and this is a stock that has moved, and all wheat stocks are moving. Now what I like to do is, like, if you put the name of the company here, right, okay, what it'll tell you, it'll give you other stocks that people are watching. So these are other wheat stocks that people are looking at. And you know, once, you know, what happens is all the stocks, when a sector moves, like all the stocks in that sector could potentially move. And you know, there was a contract here, got a contract. So let's go to this, use Finviz and Yahoo Finance to see how many insiders are invested in the stock. The more people invested, the better the probability the stock goes higher in price and the percentage, right? So, oh, here, I'm sorry. This is going back to check the news. Was a contract awarded, good earnings, great PR, all that other shit that I was talking about. This is moving because it's in a great sector, and they signed a contract, 2-year trade to manage a growth facility in California. All right. So because of that, people are in. The sector's hot. All the stocks are moving in the sector, and you can see that it actually, you know, gapped up to 750, and you know, it pulled back. So you know, 750 found its support at 750, and you know, it's kind of held at 750 level, you know, and now it's pulling back. And if you notice here on the Fibonacci, it retraced right to the 50% level, and then it bounced off, which I love to dip buy. You can see it here. I took it off from the 1-minute chart. But you know, this stock has the potential to continue to move. And what you want to do is look over the lifespan of that stock. So what you do is you put up the daily chart. You know, you can look over the last year, see what it's done over the last year. Now it hasn't been this high, at least in the last year. What I'd like to do then is I'll go to time frame, and I'll look at, you know, if I don't, I'll try the 5-year daily, and I'll zoom out to see. And if you notice here, you know, this stock has moved up. Now the last time it had a nice run, it got to a height of 491, and then it, you know, came tumbling down, you know. And you know, if you can, you know, if you zoom out and you keep looking, this stock has in the past, you know, got up in this $5 range, but it never really held, you know. And I'm, you know, zooming through, and if you zoom out, oops, over here, you know, this stock here again got up to 437. Zoom out. Let me just zoom all the way out. Now the last time it had this crazy run, it got here all the way up to about 950, and this was in 2015. The last time the wheat stocks went crazy were back in 2015. That's when, you know, now it's doing it again. Like history is repeating itself. It got to a high of 950, so I would definitely be watching those levels to see if it can hold those levels, and if it can break past those levels, shit, you know, the stock may run for a while, you know. And you know, it's done it before, you know. Look, you know, this stock back in 2014, when it was really at the height of the craziness, this stock went from, you know, it started running here at this you know, $12 level, and it got always high as $64 before it came crashing down, you know. So with wheat stocks moving the way they're moving now, you can, you know, see how the momentum is, and you can, you know, potentially take this for a swing trade. Now if you're day trading this, you know, and I looked at this, I didn't place a trade, but I had a potential. Now the only thing that I would have done here is, you know, you see the volume here, and you see the gap up, and you know, you got to be careful. You don't want to chase. So I would be waiting for that first pullback. And if you notice right here, it hits, this is the key resistance level at this point, and look, it finds its support right here. And what happens is it gaps up, it forms a lower high, but it double bottoms here. Right here, it would have been a great entry. would have been a great entry because it's holding a support level here. And my target at 616, I would have got in looking for at least that high to see if it's going to hold the high, and it broke through it. And look, it came back down right here, formed another higher low, which is telling you it keeps going. Now, whole numbers are psychological resistance barriers, and people started taking profit. So these were short sellers driving the price of the stock down. And you look what happened. Bounced right off VWAP, like when I showed you on COS. So VWAP can a lot of times plays a key support level, and you can make a trade off that support level, okay, off that VWAP. It reclaimed VWAP, and then it took it for a bounce. It doesn't seem like much, but 1,000 shares here at that 650 level, if you held until you got that second pullback over 7, could have made $500, or you're like, I'm in this for the long term. It's a weed stock. It's running. I'm long biased. It really just depends. But you notice how the key support and resistance levels play. They're very important to know. So it's always important to put your support and resistance levels to know what you should be playing here. And if you notice, let's pull that up. Sorry about that, guys. If you notice here, I'm putting the key support and resistance levels. Look what happened. It double topped here. So right here, it held that 750 level. Other traders see that. That's a clear resistance level, and you could have took a short here. And then look, it bounced. It formed a lower high here. And right in here, you could have took another short because it's telling you weakness. Look at this. These little pops, short sellers are shorting into these pops because they see this and then they see more weakness. They see in a little pop and then more weakness, and then they see the lower high. So they're just holding this, and look what happened. They retraced back 50%, but to that previous support level. That's why it's important to know support and resistance levels, so you know how to get in and out. And that's what day traders do. They just basically play bounces off key support and resistance levels. Now here, it got pretty close to that 50% retracement, where you could have played that bounce right off the 50% retracement. But this is not. There's not a ton of volume here, and yesterday the market wasn't that great. Now, I'll talk about the other trade I took. Well, let's see. I just want to make sure. Okay, once you place a trade, watch the key support levels, level 2 time and sales to identify a trend. Yeah, it's important that when you're in a trade, guys, that you're looking at this level 2 down here, the bidders and the askers, so people that are willing to buy the stock, and sellers that are asking, hey, I want to sell you the stock at a certain price. When you got more buyers than sellers, then that's potentially the price of that stock is going to go up. When you got more sellers than buyers, that means that the bidders, that buyers are going to have to they're going to get taken out, and the price of that stock is going to go down, right? Because there are less people willing to buy the stock. Support and demand, or supply and demand. I'm sorry. All right. So, and then the level 2, the time and sales. So green prints, are telling you that there's more buyers. Red prints are telling you there's some more sellers. Yellow prints is telling you that the price of the stock was executed somewhere between the bid price and the ask price, and the volume. So looking at these volume bars is very important to get a sense of the direction of the stock. Okay, those are the things that you need to look at to get a sense of how the stock is moving and where you're going to execute your trade. Okay, so with that said, the other stock that I actually traded was Apple. Now, the reason why I traded Apple was because I was watching the news, and they were shitting on Apple because Apple was real shady, and they were like diminishing speeds on older phones. And I knew that poor news was going to drive the price of the stock down. Now, when I caught the report, I happened to actually catch the stock here. Now, let me pull up the chart. So here's the chart, right? So when I caught, here it is. So this is yesterday, I mean. So when I caught the stock, I actually caught the news report like right somewhere around here. And I was watching the stock, and I was watching it gap up. Now, what I wanted to see was I was potentially checking to see, and this happened pretty fast, so I was potentially checking to see, is it going to reclaim VWAP and get rejected by VWAP. So and that's a trade I like to do. So I like to do it both ways. Sometimes I like to look the stock to see if it's above VWAP. Is it going to bounce off VWAP and go up, or is it below VWAP and it's going to reclaim VWAP and then continue to sell off? And that's what I did. So when I saw the stock gapping up and I saw it here touch VWAP in this candle, and if you notice here's VWAP, it touches it, and I wanted to see in the next candle, was it going to break above it? And you notice here it finished red. It didn't break above it. So in this candle here, I actually took a short, just 200 shares. But what I love about these high price stocks is that they move in points. So 100 shares in a stock like Apple can move 5 points, and you can make $500. And what's great about it is your risk is little. So let's say you're risking $1. If you lose only $100. It's not like you're losing a ton. When you're trading a low float stock and you're in a stock that's, let's say, $1, and it's a low floater, so it's moving really fast, it's really volatile, and you're taking 1,000 share position. If the stock moves, let's say it moves $1 against you, then you lose $1,000. So there's more risk with low float stocks. So sometimes these big caps, don't believe the hype. They move in a lot of points, and you don't have to take as much risk. So I just wrote it down. I just wrote the momentum down. You see here, this is the 13 EMA. It's acting as resistance here, and I just wrote this down. I just wrote it all the way down, and as long as it stood below the 13 EMA, I was good. And once I saw here that it bottomed, and I saw that, okay, here's the low. At this point, this was the low of the day, and I noticed it gapped up, and it kind of was holding this area, and right in this candle, and I covered. And I was gonna take it long. I should have, because it was a clear momentum changer. Short sellers were covering, and that's what's causing the spike. And you noticed here it came back up, and for a second here it kind of reclaimed VWAP. It never really got above it, and you notice, look how it's just tapping VWAP, but it never really gets above it. You could have took another short here if you were watching the stock. And eventually it does get above VWAP, but look, that previous support level now acts as resistance, and it couldn't really break above it, and you could have took a short here, risking that, and look, it just continued to tank. That's why it's so important to know where your support and resistance levels are. You gotta mark them so you can know. They help you identify trends to know where you invest in stocks, and that's what all these guys do, guys. When you watch these guys on Twitter, that leads me to another thing. Use multiple time frames, which is what I use here. So sorry, let me pull up. I use the one. This is the 1 minute. This is the 5 minute. This is the 15 minute, and this is the daily. Because sometimes on the 1 minute you can't really identify the trend, but it's a lot easier to see on a 5 minute time frame or even a 15-minute time frame, especially when the stocks are like the lesser the volume, the better to use a higher time frame. Especially, it gives you a better indicator of where a trend is taking place on a stock, and it give you some insight into how you can make a trade. So I look at all these, and I look at this. This is what I look at when I'm making my trades, and I also use my fibs. They really are great. I love fibs, So getting back to what I wanted to say was, I use those time frames, and I use VWAP, Fibonacci, and the 13 EMA, which I showed you. And then this is so important. Don't trust no one on Twitter, man. I mean, most of the guys are full of shit. A lot of these guys are in groups, and they got so for example, you have Tim Sykes, right? Tim Sykes has people who, he pays, like Tim Bowen and some of these other traders, he pays them. So they have an incentive to support him, because he's supporting them. And most of these guys obviously are starting services because trading is tough. You think Tim Sykes is traveling the world and buying Lamborghinis because of trading? No, he's buying that shit because people are paying an insane amount of money to buy his service, which is bullshit. And and he's making millions of dollars off his followers. And that's how he's buying Lambos and traveling the world. Okay, same thing for these guys in Investors Underground. They follow Nate, and they're all incentivized. He pays them, so of course they make fun of other gurus like they're not working for a guru themselves. It's crazy. It's all bullshit, guys. So all these guys, most of these guys are trading. If you ask them, if you're gonna join a service, make sure that they show you, say, hey, I want to see, your actual statement so you can see where all the executions take place. They're not going to send it to you. They're not going to send it because most of these guys aren't trading. Trust me. And that Profitly bullshit, that shit is going to be manipulated. You can bypass it, you know, and it's only going to post what you put. So if I'm a trader, you know, I can just only post when I'm winning and not really post when I'm losing. So it's not a real true indicator of what people are doing and how they're making money. You got to be careful. You know, all these guys, you know, they all have some incentive. They're selling you a DVD, they're full of shit, you know. So be careful with all that, guys. I mean, what I'm telling you is pretty basic. I taught myself this. You know, I watched a lot of those Tim Site YouTube videos. Like, they're actually good in the sense, like, you can get, if you know nothing about the stock market, you know, you can watch those videos and get a sense of how, like, things work and stuff. You know, but you know, be very cautious about these services. Like, the only service I joined was Cameron Foos' service. I did it for 2 months and I canceled it. It was like, you know, it sucked. To be quite honest with you, it sucked. Like, he's on there for a few minutes. He's most of the stocks that he's trading, unless you belong to a brokerage like a Centerpoint or, you know, one of the better brokerages, it's very hard to find the shares to short because he's mostly short buys. He's not really teaching you anything. He's there 20-30 minutes and then he disappears. You know, I mean, it was just, you know, it was like, I don't understand why people would pay for that. It's just, these guys aren't real teachers either. They don't have a background in education. I have a background in education. So, you know, these guys don't really know much about teaching. But in a nutshell, guys, what you do is you go through your scans, you look for the stocks that are most valuable. Look, like Buds. Buds is another one of these wheat stocks, and it gapped up too. So, you know, you don't have to go with the main wheat stock. You can look for a sympathy, meaning another stock within that same sector and make a trade on that, you know. So, you know, if we look at Buds, you look at this stock was 43 cents back in 2016, which is crazy. And now it's at 659. So imagine if you got in and held, you'd be rich right now. You know, and it's running. You know, it's running. You know, you know, all these wheat stocks are moving. Look, AGCBF is another wheat stock. You know, that, you know, not a lot of people trade, but it's up. You know, there's tons and tons of wheat stocks that are moving. You know, so you gotta do research, guys. You gotta look at the stock. You gotta look at the key support and resistance levels. You know, and, you know, you got to decide whether or not you want to make a trade, you know. You know, LT, this was a stock that was up because it said it wanted to be blockchain. They changed its name to blockchain bullshit, and that made the stock gap up to $12, you know, and it obviously gave back the majority of those gains. You know, and you gotta be careful. So now if I look at, let me put up the 10-day chart on LT, yeah, this is when it spiked up to $15 and it gave it all back. You know, just on news. So that's why you got to see what's driving the stock of the price up. But, you know, this is bullshit stock. And if you notice, you know, it came up and now it's all the way back down. This is how I set my fib level. This is it's just something that I kept on there. So basically the way you set the fib, you know, watch the video. I got the video on it, but you look at a 2-day front time frame, and what you do is you go to the drawing piece and you go to this Fibonacci retracement and you do look for the trend. So the trend here in this case is from the low of that 375 to the to the high of 569. And if you don't get it right, you can just right click on it, edit properties, and you put 375 to 569. Alright, and that's kind of how I, you know, so, you know, this is the stock, it gaps up over 2 days, this is the height, and now you want to see it retrace to one of these key levels to potentially dip by it. That's sort of how it works, you know, when you're doing the low to the high. If it was the high to the low, you want to see it gap up to see it's going to get rejected by one of these 3 key levels so you can short it. That's pretty much in a nutshell how I trade Fibonacci over the last 2 days, using the last 2 trading periods, the highest point to the lowest point, or from the lowest point to the highest point, depending on where the trend is occurring. So that's sort of how I use Fibonacci. You know, so that's kind of what I wanted to talk to you about, guys. So what I'm going to be doing is, you know, I'm just literally going to be looking through these stocks, trying to find, you know, stocks to potentially trade on Tuesday, if I do trade. I go back to work, So you know, I don't know if I'll be able to trade, but you know, if I'll be looking, like this is probably another one of those wheat stocks. So remember, you can look at the wheat stocks, you can type the name, and then you can get a sense. So what's this? PRMCF. So I type PRMCF, and here's a stock. And you can kind of look at the press release. You can see what kind of company this is. I think these are all wheat stocks. So if you go to the profile, you can kind of go to the group. And you can check. See? Yeah, we are. Yeah, it's a cannabis company. That's why it's moving. So all of them, all these Canadian cannabis companies. And then what you also want to do, I note this in my little notes, is I like to go to statistics. And what I like to do is, you know, here you can see a lot of the information about the stock history, about where its highest point was and lowest point is. But what I really like to focus on is shares held by insiders when it's available, and the float, the float. So like, let me use another stock, something like AMD, because you don't see anything here because this is an over-the-counter stock. It's an OTC stock. But here's AMD. This is a NASDAQ stock. So look, for example, so 21% of the stock is shorted right now. So so the higher the float means the more people are betting against the company, expecting the price to go down. So when you look at a stock and you're finding it on your watch list, if the stock has a high percentage of the float is low, and the stock has some good news, then you're gonna expect that stock to really spike, because all those short sellers that are in the stock are gonna cover their shares, because they have to buy those shares back, and that's gonna drive the price of the stock up. That's why it's important to check this for every stock that you want to put on your watch list. You also want to see what the percentage is held by the insiders and institution. The higher is, the more of an incentive they have for the price of that stock to go up. So that helps give you some insight into knowing, oh, okay, you know, they really invested in the company, and you know, it's important and imperative for them for that price of that stock to go up, because more people working for the company have shares in it, a high percentage of people. So these are the things that you should be looking at when you're looking at stocks. Again, so just to recap, you know, build your watch list the night before with support and resistance lines for potential entries and exits. It's best to trade stocks with a plan. If you decide to trade a stock that isn't on your watch list, make sure to review the chart history a minimum of a year to see what happens when the stock price has moved. Did it continue to go higher or spike, then crash? Set a support and resistance trend line if necessary. Check the news. Check the float. Remember, 20 million or less shares is great. That means that the stock may move in price faster. Use FinViz and Yahoo Finance to see how many insiders are invested. So I've been using Yahoo, but you know, same thing goes with FinViz. So if I put, you know, the same thing, AMD, you know, it'll give you the stock information. And here you can also see the range and how many people are in the stock. You know, you can see, I think, is it shortable, and the float. Yeah, here it is. So here's the float. Okay, the short float, to give you a sense of how many people are invested in it to go down. All right, so you can also check FinViz. I like Yahoo more, me personally, to look up the information, but FinViz is great. And actually, if you click on financial highlights, it actually takes you to Yahoo. So if you click, actually no, it took us to Reuters, but from what I remember, statements, I think it takes you to Yahoo. Oh no, it doesn't. It used to take you to Yahoo. Now it doesn't take you to Yahoo no more. But I like Yahoo, and you can see. And again, you know, if you're looking at stocks to potentially trade, you go to Screener. You go to all. Me personally, I like to look at stocks where over 750,000 shares, that is up from the open 3%. This is when I'm looking at the nightly. I have this in my Thinkorswim, but you can use this if you don't want. And then you can figure out like a price. Maybe you don't want to trade stocks above $30. I don't know. I don't care. I look at stocks at $100. It doesn't matter to me. And then if you want to really, you know, you can look right here and just hover over them, and then it gives you the daily view, and you can see like a stock like ATRA, and look, it has a gap to fill. So a stock like that, I might draw my attention. Let me just give you just one last example. So I'll pull up ATRA, And I'm looking at stock that, look, this stock gapped up from $16 to $21, and it retraced. Look at this, 61%, the key holy grail, and look, ran, and it's holding. Now, what I do is, let me pull up the chart here. I look at that yearly chart, and let me just go pull up 1 year. And look, this stock had this crazy spike. Now, what I'm looking to see is the last time when it spiked, did it, you know, does it hold its highs? Does it have a continuation? And yeah, if you looked at it, you know, look at it, it does have a history of having multiple green days of spiking, you know. So when it spikes, you know, it's done where it's actually spiked for a couple of days. Look at here, you know, it spiked, you know, for 3 consecutive days. So it would be on my radar. Now, what I would be looking to see is, all right, what was the news on it? So I would go and look up ATRA, right? It's a biotech company, all right? I'll go to summary. Okay, and I'm gonna look to see what was the news. So why Sandinger Energy jump today? So here it's telling you why it jumped. It won a clearance for late stage trial. All right, so here it is, FDA clearance to initiate 2 phase 3 clinical studies to evaluate this. Now that doesn't, just because you see that doesn't mean the fundamentals of the company are great. It just won this. So maybe that leads to a couple of days where it runs, but that doesn't necessarily mean that. What I would be looking to see, me personally, is that, and this is a whole nother topic without getting into a lot of detail. Let me pull up the 1 year chart here. I would be, you see how there's this gap. Let me remove the fibs. Let me remove it so you can see. You see how there's a gap here? Here, the high here is 1550, and then the next day it opens up at 1625. That means there's a gap, and usually stocks are like magnets. It doesn't always happen, but when you get a gap play, that usually means sometimes at some point the stock is gonna gap back down, back to at least the minimum of the high of that candle, which would be 1550. So what I would be looking here is the low of this is 1590. I would put an alert here saying, hey, if the stock dips is at or below 1590, alert me, because there's really there's no support resistance between there. And I would say, you know, look to short break below 1590 for gap fill of 1551, and I may short it because of that. Now, you know, you got to look at the chart and all that, but that's what I like. I like to look at these gap fills too. Now, that's a whole nother topic, but you know, that's a strategy that I like to implement. All right, so I hope you found this helpful. I just kind of winged this. You know, I do have a much more detailed videos that go into my strategy and really talk about all this support and resistance and what to look for and how I look for watch lists. I have literally months and months of videos. So if you go back to my thing, I literally have, if you go to my playlist, like you can go to like any one of these months and you can look at, you know, you can go all the way back to as far as December of 2016 and watch these videos. And now what I used to do is literally build my watch list in real time and then talk about what I'm looking to exit and enter and all that kind of stuff. So even though this is previous stuff, look at it, because this is great to kind of get a sense of what I was doing. Now, if you notice, I used to have all these indicators. I don't use any of this shit no more. You know, they're really not that necessary. Indicators are they lag, so they're not always that great. VWAP is great, the EMAs are great, but I mean, that's really, and fibs I love, but you know, that's really all I need now. I don't really use any of this stuff anymore. Not to say that you don't have to. I know people that use them and it's fine and it worked for me. I made a lot of money using them, but I'm okay without them. I like to have my charts clear, to be quite honest with you. That's why. All right, so, you know, watch these videos, man. If you have questions, hit me up on Twitter. You know, leave comments, like, subscribe, and